shares in a small British oil company listed on the London Stock Exchange jumped 23% on April 8, 2026. In a single trading day, moves like that don't come from routine operations, they come from results. The company is United Oil and Gas. The results came from 42 cylinders of sediment pulled from the bottom of the Caribbean Sea, off the southern coast of Jamaica, collected, sealed, and shipped to a laboratory in the United States. When the chemists ran the analysis, they found butane and pentane, higher-order hydrocarbons in petroleum science terms, compounds that are not produced by biological decomposition in shallow sediment, compounds that form when ancient organic material is subjected to intense heat and pressure, deep underground over millions of years. The chemical signature of a working petroleum system, not a producing field, not a proven reservoir, not a single barrel of commercial oil. Evidence, that clearest geochemical evidence yet that something is present beneath the seafloor south of Jamaica. The Walton-Morant license area has produced 0 barrels of commercial oil in the entire recorded history of the island. Exploration has been ongoing, in fits and starts, since the 1950s. The last serious well drilled within the license area was completed in 1982. This week's laboratory results did not change that record. They did change the conversation about whether that record is going to stand much longer. The geography matters to understanding what's at stake. Jamaica sits in the northern Caribbean, roughly 90 miles south of Cuba, and about 600 miles southeast of Miami. Population of approximately 3 million. The economy has historically run on sugar, bauxite, tourism, and remittances sent home by the Jamaican diaspora. The land area is about 10,000 square kilometers. The offshore territory is a different scale entirely. To the south of Jamaica, beneath the Caribbean Sea, lie 2 large sedimentary basins, the Walton Basin to the west and the Morant Basin to the east. Together they cover 22,400 square kilometers. United Oil and Gas holds the exploration license on all of it. 22,400 square kilometers is roughly equivalent in size to the Stabroek Block in offshore Guyana. That comparison will come up again because it's impossible to discuss Jamaica's offshore potential without it, and because the risks of drawing it too quickly are as real as the case for drawing it at all. Oil exploration in Jamaica began officially in the 1950s. In the roughly 3 decades that followed, the industry drilled exactly 11 exploration wells across the entire country, onshore and offshore combined, all of them between 1955 and 1983. The last of those wells was Arawak-1, completed in 1982 on the Pedro Bank within what is now the Walton-Morant license area. Arawak-1 found nothing commercially viable. After that, the industry largely moved on. More than 40 years passed without a single new exploration well in Jamaica. What those 11 wells did find is significant in context. 10 of the 11 showed oil traces of hydrocarbons detected in the formations during drilling, not commercial volumes, not in the right configurations to produce from, but the geochemical signal was present in 10 out of 11 attempts. The basin was generating hydrocarbons. The question was where they were accumulating, and in what quantities. For decades that question went unanswered. Jamaica's offshore was considered too frontier, too high risk for the capital commitments major operators required. The Caribbean had Trinidad, which was already in production. South America had Venezuela. There were simpler opportunities elsewhere. The Petroleum Corporation of Jamaica, the PCJ, the state oil entity, kept the geological files current and the exploration framework alive. But commercial activity was minimal. Around 2016, CDG Kiro Consulting, a French geoscience firm, partnered with the PCJ to conduct a comprehensive petroleum geological evaluation of Jamaica onshore and offshore. The study involved fieldwork, geochemical sampling, and laboratory analysis. During that fieldwork, CDG and the PCJ documented something that had not been recorded before: 2 live oil seeps on land in different parts of the island, 70 kilometers apart. Live seeps, not residue, not gas, but flowing thermogenic oil reaching the surface through the rock. Both seeps traced to Cretaceous source rocks formations between 66 and 145 million years old. Independent source rocks. two separate petroleum systems confirming the same underlying reality. Oil is being generated in Jamaica, migrating through the geology and arriving at the surface. Sophie Zerquier, then Senior Executive Vice President at CDG, said at the time that the finding builds a strong case for the island as an attractive region for future oil exploration within the Caribbean. Two seeps, 70 kilometers apart, two separate source rock formations. Oil is being generated, oil is moving, oil is reaching the surface. That's not a model or a projection. That's observed geology. There's an older piece of evidence that preceded the CDG study, and that tends to be overlooked in coverage of Jamaica's offshore potential. At Windsor, in St. Tyning, and Parish in northern Jamaica, there is a natural gas seep that has been a local tourist attraction for years. Locals charge visitors to see it. The gas burns at the surface. A researcher who visited in 2006 attempted to collect a gas sample and was initially refused by a local Rastafarian who considered the use of a gas syringe in what he regarded as a sacred spring to be inappropriate, a position that changed after some payment was offered. The analysis of that gas showed it to be almost pure methane C1, one carbon atom, but with an isotopic signature inconsistent with biogenic origin. The gas was not produced by biological decomposition near the surface. Its isotopic fingerprint was thermogenic, meaning it came from a deeper petroleum system, a natural gas seep of thermogenic origin at Windsor in northern Jamaica. Two thermogenic oil seeps discovered inland during the CGG study. Satellite slick anomalies appearing in the same offshore locations year after year for 2 decades. Oil shows in 10 of 11 historical wells. The surface and near-surface evidence for an active Jamaican petroleum system has been accumulating for a long time. The modern commercial chapter begins in 2014, when Tullow Oil signed the Walton-Morant license. Tullow is not a marginal operator. The company built its reputation on significant oil discoveries in frontier basins across Africa and elsewhere. Its entry into Jamaica was a signal that qualified exploration professionals considered the basin worth serious evaluation. Tullow spent several years reprocessing existing seismic data and acquiring new coverage, 3650 kilometers of new two-dimensional seismic lines in 2016 and 2017. They developed play concepts for both the Walton-Morant Basins and brought in a co-investor to fund the next critical step. In 2017, United Oil and Gas, a company founded by former Tullow employees, farmed into the license for a 20% stake in exchange for funding three-dimensional seismic acquisition over the Walton Basin's most prospective area. The 3D survey, covering 2,250 square kilometers, was acquired in 2018. The results of that 3D survey revealed a structure in the Walton Basin, sitting in approximately 750 meters of water that had not been adequately imaged before. An Upper Cretaceous carbonate formation, the same general rock type that contains oil in the Gulf of Mexico and elsewhere across the Caribbean, configured as a structural trap with unusual clarity in the subsurface data. Gaffney, Klein and Associates, an independent resource certification firm, evaluated the prospect and estimated it holds 406 million barrels of unrisked mean prospective resources. United and Tullow named it Colibri, the hummingbird. Other prospects in the basin carry similar names: oriole, streamertail, all Jamaican birds. In 2020, Tullow Oil announced a corporate decision to exit frontier exploration globally. The company was under financial pressure and needed to focus on assets generating cash flow. Jamaica, as a pre-drill frontier license with no production history, didn't fit that criteria. Tullow divested its 80% stake and operatorship to United Oil and Gas, which became the sole operator at 100% working interest. The way to read that transaction is contested. One reading, Tullow reviewed the same 3D seismic data they helped fund and concluded the opportunity wasn't worth their time. The other reading, Tullow's decision was driven by corporate financial constraints that had nothing to do with Jamaican geology, and United, which had been studying this asset since 2017, recognized the opportunity and took it. The geological work that followed is more consistent with the second interpretation, but the fact that Tullow, a competent frontier explorer, chose to exit is a data point that belongs in any honest account of this asset. After acquiring full control in 2020, United conducted a satellite SEEP study using approximately 2 decades of satellite imagery, covering the offshore license area. The study identified repeated surface slick anomalies, visible expressions of oil at the ocean surface, appearing at the same offshore locations across multiple years of imagery. The same spots, year after year, suggesting an ongoing and active source rather than a one-time surface event. When United overlaid those satellite anomalies on the 3D seismic data, they found that the surface expressions corresponded with features in the subsurface vertical structures consistent with fluid migration pathways running from depth up toward those exact locations. One geological review described the pattern as the anomalies and subsurface features pointing back toward a specific source location. The technical case was strengthening, but technical evidence doesn't pay for a well. Drilling a frontier offshore well costs $30 million minimum, more if complications arise, and significantly more if you're funding a comprehensive exploration program. United needed a farm-out partner, a better capitalized operator willing to take an equity stake in the license, in exchange for funding the drilling commitment. That process has been ongoing for years. In early 2024, United and the PCJ held a formal investor presentation at Jamaica's High Commission in London. Not a press conference, but a structured industry engagement at a diplomatic venue, directed at the kind of institutional and corporate capital that makes farm-out deals happen. The Jamaica Observer, covering the event, described the principals as behaving suspiciously as if they know something the rest of us are waiting to hear. By August 2024, the investor presentation in London had generated enough speculation in Jamaican social media that it had become a problem. Claims circulated that oil had already been found, that a discovery was being withheld, that Jamaica was on the verge of an announcement that was being suppressed. United Oil and Gas responded with a formal regulatory statement issued through the Regulatory News Service of the London Stock Exchange, the official disclosure channel for AIM-listed companies. Filed with the UK Financial Conduct Authority, the statement was direct. No commercial oil or gas discovery has been made. No wells had been drilled. No reservoir had been proven. The company held the license and was executing its exploration program. CEO Brian Larkin stated, "The Walton-Morant license is a vast exploration area containing numerous promising prospects. We are committed to improving our understanding of the resource potential within the license area. We continue working to secure a strategic partner to unlock the immense potential within the license." The company believed the asset was real. They had not yet proved it. They were working toward proof. Between August 2024 and April 2026, the project moved through a sequence of regulatory and operational milestones. The Jamaican government extended the Walton-Morant license to January 31, 2028. Without that extension, United would have faced a decision point on drilling before the technical program designed to attract a qualified partner was complete. On June 17, 2025, Jamaica's National Environment and Planning Agency, NEPA, approved 2 key authorizations for United at a formal board meeting: an environmental permit for offshore hydrocarbon exploration and a beach license authorizing seabed survey operations including physical sample collection. Both were required before the planned seabed geochemical exploration program could proceed. In November 2025, United signed a vessel contract with TDI Brooks International, an American company specializing in marine geochemical survey work, to execute the program. The SGE survey was designed in 3 sequential stages. Stage 1 deployed a multi-beam echo sounder MBES to produce high-resolution mapping of the seafloor over both basins, acquiring 1,189 line kilometers of data. Stage 2 deployed heat flow probes across the Walton-Morant Basins to measure thermal gradient in the sediment, which informs geological modeling of the subsurface. Stage 3 used the integrated output of the first 2 stages, combined with the existing 3D seismic data and the locations of the satellite-detected surface slick anomalies, to select 42 coring sites and then drill them. United emphasized that the site selection methodology for this survey was materially different from previous attempts. Prior seabed sampling in the region had not used the full combined dataset to position cores. This program was the first to integrate 3D seismic, MBES seabed mapping, and satellite-derived slick anomaly data simultaneously in site selection. The cores were going to the exact locations that the combined evidence identified as most likely to show thermogenic hydrocarbon presence. Operations ran for 2 to 3 weeks in early 2026. Sediment was successfully recovered from all 42 targeted locations, 100% recovery. The cores were sealed and shipped to TDI Brooks Laboratories in the United States for geochemical analysis. The results were released this week. Geochemical analysis of the 42 piston cores identified C4 and C5 hydrocarbons, butanes and pentanes in select cores within the headspace gas dataset. To understand why that matters, a brief explanation of how headspace gas analysis works in petroleum exploration. When a sediment core is brought to the surface and placed in a sealed container, any gases present in the sediment are released into the headspace, the space above the sample. Those gases are then extracted and analyzed. The compound profile of that headspace gas tells you something about the source of any hydrocarbons present. The most common finding is methane C1, one carbon atom. Methane is produced abundantly by biological processes near the sea floor, bacteria decomposing organic matter in shallow sediment. Nearly every marine sediment core in the world shows methane. It has no diagnostic value for petroleum exploration. What matters is whether heavier compounds are present. Ethane is C2, propane is C3, butane is C4, pentane is C5. These higher-order compounds are not produced in meaningful quantities by biological processes in shallow marine sediments. Their presence, particularly at C4 and C5, is strong geochemical evidence of thermogenic origin. They indicate that a mature petroleum system exists at depth and that hydrocarbons generated by that system are migrating upward and reaching the sea floor. United's statement to the London Stock Exchange said, "These higher-order hydrocarbons are not typically associated with biogenic gas systems and are therefore consistent with a potential thermogenic contribution." The company described the finding as adding to an established body of evidence for an active petroleum system in Jamaica, encompassing the satellite slick anomalies, the thermogenic geochemistry from existing onshore and offshore wells, the onshore and offshore oil seeps, the onshore surface outcrops, and now thermogenic hydrocarbons in seafloor sediment at locations positioned directly over the license's most prospective structures. United shares on the London AIM market jumped 23% on the day of the announcement. CEO Brian Larkin said, "The 2026 Piston Core Survey results represent an important step forward in our understanding of the Walton-Morant license. We have identified butane and pentane hydrocarbons in the analysis. These results enhance our understanding of the license and provide an important input as we advance towards a drilling decision." An input towards a drilling decision, not a discovery announcement. The language is precise and intentional. Energy Minister Darrell Vaz responded publicly the following morning. In a voice note distributed to the Jamaican press, Vaz said, "While I welcome the positive news coming out of the exploration results, I'm cautiously optimistic going forward, because that was just to see if there was traces of oil and gas. We will not know definitively until such time as we drill a well which will require the company, United Oil and Gas, to raise between $60 million and $70 million through partnerships with big oil companies. That figure, $60 to $70 million is what separates the current evidentiary position from a confirmed result. United Oil and Gas is a small AIM-listed company. The entire SGE survey program that produced this week's results cost approximately $3 million, the full work obligation under the extended license. The company's market capitalization, even following the 23% share price increase, is a fraction of what an offshore frontier well costs. To get to a drill bit, United needs to close a farm-out agreement with a capitalized partner. That partner would take an equity stake in the license in exchange for funding the drilling commitment. Multiple parties are reportedly under non-disclosure agreements. The SGE results now go into the data room those parties are reviewing. The results strengthen United's position in those negotiations. They do not guarantee an outcome. The gap between active farm-out discussions and a drill bit in the water is measured in months, at minimum, more likely in years, and depends on commercial negotiations that have not concluded. The Guyana comparison is inevitable in any discussion of Jamaica's offshore potential, and it requires careful handling. In May 2015, ExxonMobil announced the discovery of significant oil volumes in the Stabroek Block, an offshore license roughly comparable in size to Walton-Morant, located approximately 120 miles off the coast of Guyana. That announcement from a drilled, confirmed well called Liza-1 was a proven discovery. Oil had been found in commercial quantities. The investment case was established. At the time of Liza-1, Guyana's GDP was approximately $4.3 billion. The country was among the poorer nations in South America, with an economy built on agriculture, gold, and bauxite. By 2025, the International Monetary Fund projects Guyana's GDP to reach nearly $26 billion. In 2022, Guyana posted 57.8% real GDP growth, the highest of any economy in the world that year. According to the IMF, production from the Stabroek Block is currently targeting 1.3 million barrels per day by 2027. ExxonMobil went from the Liza-1 discovery to first commercial oil production in under 5 years. More than 30 individual discoveries have since been made within the Stabroek Block. Total recoverable resources are estimated at more than 11 billion barrels of oil equivalent. Jamaica's current economic position makes the comparison understandable. Jamaica's GDP in 2024 was approximately $19.93 billion. Real per capita GDP growth has averaged less than 1% annually over the past 30 years, one of the slowest sustained growth rates among developing economies. Fuel and lubricant imports in the first 9 months of 2025 alone totaled $1.37 billion, approximately 1/4 of everything Jamaica imported during that period. High energy costs run through every sector of the economy. The unrisked prospective resource estimate on the Walton-Morant license is up to 7 billion barrels across all prospects and leads. The independent evaluation of 11 high-graded prospects alone puts the figure at 2.4 billion barrels. Colibri alone, the primary drill target, is estimated at 406 million barrels mean case. United Oil and Gas has stated that the largest single repository within the license area has a potential value of $23 billion at 100% working interest over a 25-year production life. At current oil prices, the company has calculated a break-even price for Colibri of approximately $25 per barrel. If those numbers were realized, if the wells came in and production was established, the structural fiscal position of Jamaica would look materially different. The energy import bill, the trade deficit, the debt-to-GDP ratio, these are not projections the Jamaican government has made. They are the implied economic consequences of the operator's own resource and economics estimates. The Guyana comparison is also where the honest accounting of risk must be stated directly. Guyana's story began with a confirmed discovery. ExxonMobil drilled a well, found oil, and the investment case was established from that point forward. Everything that followed, the additional discoveries, the production, the GDP growth, flowed from a proven resource. Jamaica's story, as of April 2026, is at an earlier stage. The geological chance of success for Colibri was estimated at approximately 19% before the SGE survey. Independent geological analysis suggests that positive geochemical results from the piston core program could push that probability toward approximately 32%. That is a meaningful improvement for a frontier basin. 32% also means there is roughly a 2 in 3 probability that a drilled well finds nothing commercially viable. That is not a dismissal of the asset. That is what frontier exploration is. Frontier exploration has always been a low probability, high consequence activity. The reason operators pursue it is that when a frontier well comes in, the scale of the discovery can be large enough to justify the probability of failure many times over. The history of Jamaica's search adds its own context. The basin has carried a promising geological profile since the 1950s. Oil shows in 10 of 11 historical wells. Thermogenic natural gas at Windsor. Thermogenic oil seeps documented inland. Satellite slick anomalies persisting in the same offshore locations for 2 decades. Mature source rocks confirmed by multiple independent analyses. Structural traps identified on 3D seismic. The body of evidence is genuine and consistent, and the basin has still never produced a single barrel of commercial oil. The geological explanation for that record is specific rather than general. Prior wells were not drilled in the locations now identified as highest priority based on modern 3D seismic and integrated datasets. The evidence for exactly where to drill has taken decades to develop. The 3D seismic acquired in 2018 was a material advance. The satellite seep analysis in 2020 was a material advance. The SGEE results from this week are a material advance. Each of these steps has shifted the probability profile in a quantifiable direction. The probability of success at Colibri before any of this work existed was not quantifiable in any rigorous sense. It is now approximately 32% by independent geological estimate and is expected to improve further as the piston core data is integrated into the geological models. That progression is real and documented. It is also still short of the certainty that only drilling can provide. Since 2014, when Tullow Oil signed the Walton-Morant license, an estimated $39 to $40 million has been invested in the license by successive operators, Tullow's seismic campaigns, United's 3D acquisition, to satellite studies, geological modeling, farm-out advisory work, and the SGE survey. In that same period, no exploration well has been drilled. The Arawak-1 well completed in 1982 is the only well within the current license boundary with any data relevance, and it sits on the Pedro Bank, a carbonate platform that is not geologically representative of the Walton Basin's main prospective targets. It provides limited calibration value for what Colibri and the other primary prospects might contain. Drilling a well at Colibri in 750 meters of water is estimated to cost approximately $30 million for the well itself in a dry hole scenario. The total capital raise required to get to and through a drill program is $60 to $70 million per the Energy Minister's public statement, $40 million in pre-drill expenditure, and another $60 to $70 million required to find out what that $40 million helped to de-risk. That is not presented here to discourage. It is the standard economics of frontier offshore exploration. ExxonMobil invested years and hundreds of millions of dollars in the Stabroek Block before Liza 1 confirmed the resource. The economics only appear straightforward in retrospect. Jamaica does not exist in isolation in this analysis. Its energy position is shared across much of the Caribbean. Of the 15 member states of the Caribbean Community, CARICOM only 4 produce oil and gas commercially: Guyana, Trinidad and Tobago, Suriname and Barbados. The remaining 11 import essentially all of their energy. The Council on Foreign Relations published an analysis in early 2026, noting that many Caribbean countries spend up to 15% of their GDP on fuel imports for power generation. Trinidad and Tobago, historically the region's primary LNG supplier, has seen its LNG exports fall by 40% since the COVID-19 pandemic, as its own reserves deplete. The regional energy supply situation is tightening. For Jamaica specifically, which spends over $1 billion annually on fuel imports and has recorded a visible trade deficit of approximately $4.38 billion in the first 9 months of 2025, according to the Statistical Institute of Jamaica, domestic oil production would represent a structural change in the country's fiscal and trade position. Not just additional revenue, but the elimination of a major recurring import cost. The regulatory announcement from United Oil and Gas this week was issued through the Regulatory News Service of the London Stock Exchange and was regulated by the UK Financial Conduct Authority. It is not a social media claim or an unofficial statement. It is a formal market disclosure filed by a publicly listed company under securities regulations that impose legal liability for material misrepresentation. What that disclosure states is this: Geochemical analysis of 42 piston core samples acquired across the Walton-Morant license identified C4 and C5 hydrocarbons, butanes and pentanes in select cores within the headspace gas dataset, consistent with thermogenic origin. That finding adds to an established body of evidence for an active petroleum system in Jamaica. What the disclosure does not state, and what cannot responsibly be inferred from it, is that a commercially viable oil field has been found. The next required step is a drilled exploration well. That well requires a capitalized farm-in partner. That partner has not yet been announced. The timeline for closing a farm-out agreement and executing a drilling program within the current license, which expires January 31, 2028, is tight. Darrell Vaz has been the most consistent public voice on this subject throughout the exploration process. He has characterized the results cautiously at each stage during the investor evening period in 2024, and again following this week's SGE results. He has not overstated the significance of the geochemical findings. He has also not dismissed them. He described his position this week as cautiously optimistic. That phrase from a government minister whose country has been searching for commercial oil for 7 decades reflects an assessment of the technical position as it actually stands, not as the most optimistic or most pessimistic reading of the same data. His public statement of the capital requirement, $60 to $70 million is a practical signal to the market about what needs to happen next. Jamaica has been conducting oil exploration since the 1950s. 11 wells drilled in a 30-year period. No commercial production. An estimated $40 million invested in the current exploration phase without a drill bit reaching the primary targets. The basin has shown geological promise at each stage of investigation, and that promise has been quantified with increasing precision as the technical tools improve. The piston core results released this week represent the most direct geochemical evidence yet that the offshore petroleum system is active. The analysis confirmed thermogenic hydrocarbons at seafloor locations selected on the basis of the best integrated dataset yet assembled for this license. That is a material result. It is not the final result. A drilled well is the only way to confirm whether commercially recoverable oil exists in the identified structures. The distance between the current evidentiary position and a confirmed discovery is real. It requires a farm-out partner, a capital commitment of $60 to $70 million, regulatory approvals for drilling, and a well that comes in productive. Multiple parties are reportedly under non-disclosure agreements and evaluating the license. The SGE results are now in that data room. An independent geological review noted that the immediate objective of the technical program is to extend the proof offshore. Onshore proof exists in the oil seeps, the historical well data, the surface outcrops. Offshore geochemical proof now exists in the piston core results. What remains is subsurface proof, a drill bit reaching the reservoir and confirming oil in commercial quantities. That step has not been taken. Whether it is taken and when depends on the outcome of commercial negotiations currently underway. 42 sediment cores from the Caribbean seafloor confirmed that something is generating thermogenic hydrocarbons beneath the waters south of Jamaica, and that those hydrocarbons are migrating toward the surface directly above the license's most prospective exploration targets. That is the state of the record as of April 2026. The search that began in the 1950s is not over. It is closer to a definitive answer than it has ever been.